Well, good afternoon and welcome to the end of day market review for January 26, 2012. My name is Jason Waugh, one of the trainers and success coaches here with Ideal Trading Lifestyle. I'm going to be walking us through today's presentation. Now, before we get into the presentation, we are just going to ask that you give this disclaimer a read. Once you're done, we can go ahead and continue on with the rest of the presentation. All right, so our agenda is to start by looking at the daily news, just seeing what's going on a global scale and seeing how it's going to be affecting the U.S. markets. We are going to have the market outlook, which is going to include analysis on the S&P 500, where we'll be looking for support and resistance levels, as well as the current location of the MACD. We'll be taking a look at the volatility indicator, just to see how much volatility and fear is in the current marketplace. There's nothing on our current watch list, and there is nothing from our previous watch list that we liked. So we'll probably end up fast forwarding through all of that, though when we get to the part of the presentation, I'll just double check and see if there's nothing that potentially just popped up, which means we will just discuss what we're going to do for tomorrow. It's going to be pretty obvious for our basic customers. Advanced customers, you have a few more options, though we've been expecting a pullback for a little bit here, and we are experiencing some pretty sideways trading, which is expected with the pullback that we're looking for. So with that said, if anybody has any questions, all you need to do is type in your message to the chat box, or you can just raise your hand and we'll answer those questions at the end of the presentation. If you raise your hand, all I would do is unmute your line so you can ask that verbally. All right, so getting in here to the news, we can see here that based on this news, Wall Street has ended down and says that weakness may be ahead. Now, whether or not that weakness is really going to be there is really dependent on what we continue to see with earnings reports and the condition of the debt crisis that's been going on in Europe. But we know that we've been expecting a pullback for quite some time. We've had a really good bullish run. We've been in a very tight trading range, but we have been pushing ourselves into higher highs and really just giving us a lot of bullish tendencies. Now, we were expecting a pullback earlier, and we had a couple of days of stalling, and then we ended up having a random good day yesterday. This is all expected to see when you've got a nice, strong, bullish tendency. But this doesn't mean that we're not going to have that pullback. The S&P 500 is still overbought, so we can expect to see something shortly. But by looking at this, we can see that the S&P 500 has gone down about 0.5%, NASDAQ down about 0.5%. Well, gold and oil is working itself up, and gold just keeps on climbing higher and higher, with it currently sitting at 1721. Moving into the actual charts for the S&P 500. Here we go. We can see the sideways channel, or the slowly rising channel that we've been in since the beginning of the year. And we can see that the extreme highs and lows of both today and yesterday are touching the upper and lower trend line. So we can see that the channel is just very tight and not really giving a whole lot of room for volatility. With that said, what we're expecting to see is a breakout. And now that breakout is going to happen either up or down, though because we're looking at a bullish sentiment, we can expect that breakout to be on the upward side. But we've got other advanced indicators which are just saying, you know what, yes, that breakout is very possible, but there needs to be a pullback first. We need to prune the S&P 500 down a little bit. The MACD is kind of just fluctuating all over the place now, and it is now down to a declining bullish. And this time, the black line is just below the blue line. So we haven't actually seen this at all for 2012. So we now have that black line down below the blue line. getting into the volatility indicator. Volatility indicator is currently at 18.57 versus 18.31 yesterday. Now we can see that the volatility indicator isn't really flying around too much, and that's because it's below 30 and even now down below 20. So there's a lot of stability there, and this isn't necessarily a sign for increased volatility with this pullback that we're expecting. It's just a normal, healthy pullback, which any and every market will experience, no matter how bullish they are. So let's go ahead and just double check to see if there is anything on our basic watch list. Like I said, the last time I looked, there was not, and there still isn't. So we're really going to be doing nothing as basic customers for today, obviously, which means that we're not going to be trading tomorrow. So for those of you who are basic customers, poke your heads in tomorrow, obviously, see what's going on, but don't be expecting to making any trading decisions until Monday's trading day. As for the advanced customers, go ahead and continue to see what you guys have. You might have a couple stocks on your watch list. By the looks of it, we have 2. You could also go through your own portfolio of stocks, look at some ETFs, and look into trading those ETFs depending on how you see the markets move tomorrow morning. If you do trade tomorrow morning, be aware that we are very bullish, which is signs that we can expect the markets to go up, but we're also overbought, which means there are going to be some opportunities to short the market or use some inverse ETFs tomorrow if the futures and the news is down. But again, because the markets are bullish, make sure that you're conservative with your trades and really just take small bites until we can see some clear stability again. So that said, this has been the end of day market wrap-up for Thursday, January 26, 2012. Have yourself a good rest of the day. Ciao for now.